don't just get a bullhorn and start shouting out tax law or compliance issues. No, be a marketer.
Hi, this is Christian Jones, and you're listening to the Pro Marketer podcast, where, hey, whether you're in the tax and compliance space or preparation, resolution, accounting, or whatever slice you find yourself in within the tax and accounting industry, we cover lots of great tools and topics and strategies within this podcast to help you guys build your firm, serve your clients, and make our industry a better place. And we've had a lot of great conversations on this podcast. And we have a returning guest, Michael Gordon, who has come on today to talk about something that if you're not privy to this yet, I bet you are, but if you're not, you're about to be. And I think most of our industry by the end of the year might be in a panic about BOI reporting. And so I'll let Michael cue us up on what that is here in a second, kind of walk us through that. But that's the conversation we want to have today, is about that. And so Michael is amazing. First of all, he's a great guy. He goes way back with the founder of TaxProMarketer, Nate Hagerty. Shout out to Chauncey Hutter in Charlottesville, something Mike and I were talking about offline. So there's a lot of good connections between us, our company, between Nate, between Michael. But you were raised out in San Francisco, just like my wife, which is great. Yeah. What's that?
Your wife was raised in San
She
Francisco?
was. Yeah, just inland, just like 40 minutes inland. She grew up there. So she lives in the Midwest now and hates it in the wintertime. She's just miserable. She's like, oh, this is not her. She's not used to it. Man, it's been so freaking cold here. But you're out in, tell me if I'm right. You're still in Oregon, right?
Coastal Oregon, Coos Bay, Oregon.
There we go. So out in paradise of Oregon, probably is a little rainy at times, but more beautiful than Kansas City where I am. And like I
Mm.
said, oh, go ahead.
I was going to say, it's the price you pay for all the green we have. You want green, you got to want rain.
Yes, yes. I could use some green right now during the dead days of winter. And as you were telling me before the podcast, you sold your firm back in 2021, so you are officially retired, but you found a unique way to be engaged in our space, both with Chamber of Commerce that you're, engaged in, or different groups or associations that you're speaking in, specifically around BOI reporting and requirements. And so that's what brings us here today, is to hear from the only one I know that's banging the drum on this in a sufficient way. And so thank you, Michael. Hopefully that's a good intro. If there's anything I missed you want to say about yourself,
No,
tell us. But this is an exciting conversation and a needful one.
yeah. No, it's good. I'm retired and working with 3 nonprofits, having a ball, just having a wonderful time. I get to engage when I want to and disengage when I want to, something you can't do when you're in practice.
Yes.
Like to, but especially with some clients, you'd love to disengage, but you got to pay the bills.
Yes.
Had a good
Yes.
sized
Yes.
practice here in Coos Bay, 7 employees, and we did about $1 million in sales.
Hmm.
Sales. See, I use that word because I've been with Nate and in
Yes.
reps. Had a great practice, wonderful clients, and 2 of my senior staff bought my practice, and they're doing wonderful. And that's good to see. So I'm able to retire well and do what I want.
Yes. And continue to serve our industry, which is like, kudos to you. Thank you. Thank you for, we won't go through your slide deck today, but I will put it in our show notes. Michael has developed an entire slide deck around this, kind of the most current ins and outs, details, things that aren't clarified yet. I'll let him speak on that. But if you're curious to dive in more, just look in the notes here and you can see this wonderful library of content he's put together on this topic while retired. So thank you again. We so appreciate it, because tell us about this. How did you discover that this was a problem you wanted to get engaged with? And it's animating you, obviously. You want to help and serve. Just give us like a little bit of an origin story for you with this, and then what this is. And then let's talk about accountants and business owners, both. Like, what do they need to know about this, and things that you think that we should have on our minds. That's about the size of my agenda. Just a fun conversation.
I do want to help the practitioners in particular know what they should and shouldn't
Yes.
do. We got
Yes.
to do this first. About 2 years ago, more than 2 years ago, back in 2021, Congress passed what's called the CTA, the Corporate Transparency Act. And I remember seeing it being reported on one of my things that come across my desktop. And I looked at it and wondered, what the heck is this? It
Right.
looks like somebody's creating more work for somebody, which is typical. But I remember looking at it and asking some friends about it and waiting for more stuff to come out about it. And I saw nothing. And I started investigating it and realized, wow, this is a lot bigger than I thought it was. And it's going to encompass the need for a Herculean effort on the part of small businesses to keep up with this thing. And what I discovered was that most of my lawyer friends and most of my CPA friends were just sticking their head in the sand because the Corporate Transparency Act really had nothing to do with income taxes. It's not an IRS issue. It's not an income tax issue. So most people just said, I got enough going on in my world just trying to keep track of income tax rules. I don't know what this thing is. Let it slide over there somewhere. And even to this day, I just taught, like I told you, I just taught 75 people at a Chamber of Commerce luncheon, many tax professionals and attorneys there. Almost none of them had even heard of it, yet alone wondered about it. And I'm finding that all over the country as I'm doing some of these things. There are a lot of people finally coming out of the woodwork because they're getting some phone calls. And they're
Right.
starting to realize, uh-oh, I think something went into effect January 1st. And how come I don't know about it? Because you haven't been following it. And maybe good for
Right.
you. Maybe bad for me. You had to read hundreds of pages over the last several months, which I have. But basically, here's what's really going on. I call it cloak and dagger stuff because
Mm.
we've had the CIA, all these clandestine organizations for years running after and chasing their tail to locate and arrest or jail or push out of the country these, we'll just call them these nefarious bad actors, these
Yeah.
people and companies that come in and they want to have all these ill-gotten gains, run them through our system, our financial system, without any way to interact with it or discover who it really is that's doing it, and avoid taxes. So that's
Right.
the only place the IRS comes involved is these guys want to avoid all income taxes. So as it turns out, all of the modern countries in the world have already set up a database. It's country by country, these massive databases
Mm.
where they're able to track who really is running stuff in these small businesses and who really owns these small businesses, who's controlling the money flow here.
Right.
And so the United States is actually the last modern country in the world to discover the need for this thing. So we're in the process, FinCEN, which stands for Financial Crimes and Enforcement Network,
Right.
is in the process of setting up this, what will be probably the largest in the world database of this BOI, beneficial ownership information. Now, what's interesting is they're doing the same thing the IRS does with us tax professionals. They're deputizing us. They're just saying, well, we're not going to go do it. You guys go do it. Like with employers. Hey, we're not going to withhold money from people. We're going to make the employers do it. And then we'll fine the employers if they don't do it. And we'll
Wow.
fine the employees if they don't report it properly and don't report their taxes. So they're
Right.
coming back and saying, hey, here's the rules. Hope you guys do it. And if you don't, you could have civil penalties, which are basically 500 bucks a day, capped at $10,000 for non-compliance. Then if there's willful non-compliance, and that's defined in a number of ways, but if there's willful non-compliance, you're going to get, in addition to the civil penalties, you'll get criminal penalties, which can be 2 years in prison. And so one of the big issues right now is thinking, okay, wait a minute, more than likely in the first year or two, the level of non-compliance is going to be very high. And we'll see that in a second.
Right.
So the question I have is, how crazy is FinCEN going to get? And
Right.
how crazy can they get with enforcement?
Mm-hmm.
I don't know what their level of personnel training is or even their numbers. How are they going to go out and enforce this? Who's going to do it? How many people do they have that are going to get trained enough to do it? Nobody knows. So the real issue is how much teeth is there going to be on these 500 bucks a day, 10 grand, and 2 years in prison? Or are they
Right.
going to really step it up and make some examples of some people so people actually fill it all in and do it? A couple other things. We know now that the forms to be filled out only came about on January 1st. Prior to that, nobody had a clue what they look like or anything.
Wow.
You can only file them electronically. There's
Mm.
no form. You can't go like you can on the IRS website. I want to file Form 1040, go on the website, find it, print it out, fill it out, and send it in. Can't do that. It's only filing electronically. And there's two ways to file. You will file electronically using their form. And that's where you have fields to fill in with name information, your driver's license, that kind of stuff. And then that gets uploaded to their website. Or there's a second option, which is a PDF version, which also has fields to fill out. But you can download the PDF version, fill out the fields, save it on your computer, and then you got a copy of it, and then upload that to FinCEN. Now, a seminar I recently attended where I talked to a buddy of mine who also used to teach for Gear Up, and he was saying that he's gone in and actually done it for his firm. His recommendation was, I think the practitioners on this line should know this, his recommendation was don't use the electronic version, because when you fill out the spaces, you're unable to edit what you filled out. So you make a mistake, you got to cancel out of everything, go back in, set everything up again, and go all over again.
Right.
On the version, you can save it, download it to your computer, make any changes you need to make, and then when you're ready and it's in the format you want it with the information properly reviewed, then you can take that and upload it. So he's recommending use the PDF methodology to file it. They're both online, they're both at FinCEN. He's just saying don't choose the electronic version. We'll see.
Yeah.
I have yet to fill mine out. I'm debating whether I want to do it now or later. I'll probably do it later because I think by later we'll have some more questions answered. But anyway, this is a simple with some crazy nuances. Really, the initial thing is just this, and this is something we're going to have to help our clients with. First thing is, our clients, including everyone on the line here, do I need to file? And you only have to do two things. One, am I a reporting entity? And we'll talk about that. If the answer is yes, then you go and say, okay, if I am a reporting entity, because if I'm not, see you later. I'm going to go out and ride my motorcycle or something and go river rafting. But if I am a reporting entity, then, oh man, am I exempt? Could I possibly be exempt and not have to file? Even though I'm a reporting entity, can I get away without filing? The answer is yeah, but there's 23 exemptions. You got to meet one of them. So that's the first thing you got to do, make that determination. And our clients, I'm looking down some of my notes, our clients are going to be very concerned about this. And here's the best way to help them. When it turns out, are you a reporting entity? The good news is you only got to ask one question. To create my business, my corporation, my LLC, my partnership, did I have to file some kind of document with a Secretary of State? Like here in Oregon, I used to be just Michael A. Gordon, CPA. I was a sole proprietorship. Did I file anything to set up a sole proprietorship? No, I just opened a bank account, started working, bought some desks, scanners, and man, went to town. I didn't file anything with the Secretary of State. So a sole proprietor does not have to worry about this beneficial ownership information reporting requirement. But later, at the advice of an attorney I did a lot of work with, he said, Mike, you should become an LLC for legal liability purposes. It suits you better in certain circumstances. He convinced me, so I went online. And in Oregon, we go to www.filinginoregon.gov, and you fill out the paperwork, pay your $100, and bam, you're an LLC. So I became a single member LLC. Nothing changed on my tax return. I still file a Schedule C. Nothing changes. But I then had to file a paperwork with the Secretary of State. So now I am a reporting entity.
Right.
In some states, a general partnership does not have to file any paperwork with the Secretary of State. I don't know state by state the rules. I just know there are some states where you do, some where you don't. In those states where you do, if you are operating as a general partnership, you will need to file a BOI report, or you will be considered a reporting entity.
Right.
Whether you file or not depends on whether you're exempt. We'll talk about those in a second. In other states, you don't have to file anything to become a general partnership. Limited partnership, usually, yeah. LLC, for sure. Corporation, obviously. Those are going to be reporting entities. They don't necessarily mean you got to report. Now you got to go and find out, do I meet any of the 23 exemptions? And before I go on, I'm going to try something here. This probably doesn't work. Nah, it's not going to work well. There are two reports. I'm going to just read the titles. So those online here with us now, you want to go on to FinCEN.org and there's so much information there on BOI stuff. It's pretty freaky. You can read hundreds of pages. I'm sorry to tell you, I have. I've read all the stuff. That's not me bragging. That's me whining. Now, there are 2 documents on that website you can get, and I'm going to tell you all, get them, print them out, whatever. I got mine printed out double-sided. One is 38 pages, one's 45 pages. They've got everything you need to know. One is called the Beneficial Ownership Information Reporting Frequently Asked Questions, the fact sheet. It's relatively new, came out fairly recently, and it's got 38 pages, fabulous stuff, easy to read. The second one is a small entity compliance guide. Now, they aimed the frequently asked questions at you and I, and
Right.
the entity compliance guide is more for the small business who doesn't want to pay a fee to us or something. They want to learn it on their own.
Right.
And I will tell you, I've gotten a lot of information from both of these documents, which we will talk about. And there's some really good stuff, there's some really weird stuff, and there's just some unknown stuff.
Yeah.
So I'd say first and foremost, for those of us on the call here who are going to be needing to help clients, print out these 2 documents. Now, let me start by saying this. Many of you on this line will be carrying what we call the malpractice insurance. I go through a company called Cameco, and they're down in California. They're probably the largest in the country, only because California is the most litigious state in the union. Well, what are you going to say? So they deal with more lawsuits than anybody. Some time ago, they came out and made a statement that they believe that any of their insured who are filling these forms out for their clients are going to be considered guilty of practicing law. Now, why is that important? They didn't come out and say it, but I think where they're going with this is then you're not going to be covered if you make a mistake and get sued because you're practicing law, and we're not covering you under malpractice insurance if you go into doing what lawyers are supposed to do. Don't practice law. And I think I would say that to people on this line. Don't say, well, we're going to go out and charge $500 to fill out the forms for the clients. Again, if you're thinking that, because you say, well, I don't do anything with Cameco, I don't believe Cameco, call your malpractice carrier, just make sure. But either way, let's just be honest, we're going to be called. And my attitude is, I will help somebody fill out the form. But by that, what I mean is, I will help point out what needs to go on the form. And that primarily means what we just said, are you a reporting entity and are you exempt? And I'm not going to make those decisions. I'm going to simply point out the pages in the guide here and walk them through it. They're going to make the call. And then we're going to talk about what's a beneficial owner, what's a company applicant. And there's some interesting rules here. For whatever reason, remember, this started in 2021. 2024, what happened? Well, FinCEN said, this stuff's so goofy, we're giving people a chance to get up to speed here. So they said, if you have been in existence prior to 2024, like me, for a couple of decades, well, then you have an entire year. If you're a reporting entity and you're not exempt, meaning tough luck, tough bananas, you got to file. If that's you, and you've been around prior to 1/1/24, you got an entire year to file your report. You can wait till the end of 2024. That's why I said, I'm considering, should I do it now or should I do it later? I don't know. But if you're formed in 2024, we're going to give you 90 days.
Yeah.
Okay. And it used to be 30. They moved it to 90 because they got so many comments saying, hey, come on, man. Hardly anybody even knows what you're talking about yet. You got to give more than 30 days. Okay, we'll give 90. If you get formed in 2025 or beyond, you only have 30 days. And again, because they're thinking, come on, man, we gave you over a year here. Get with the program, learn this thing already. So in 2024, all right, we'll give you 90 days. In 2025, you got 30 and that's it. Then, and this is to me a big issue, and practitioners, you really need to pay attention to this one. They have so many rules on what if there's a change, because people still think this is an annual filing. It's a one time in your lifetime. That's it. You only file a report once. Well, wait a minute. I don't file again? The answer is no, but not really. It's no unless you have a change. So the only thing you'll ever file again is an amended or revised form.
Hmm.
And you have, again, you got 30 days to
Wow.
file an amended report. And this is where I'm going to tell practitioners, be really careful how you advise your clients. Here's
Right.
why. I want you to think about this. We're going to list a company applicant. And there's only two kinds of company applicants, a direct filer or somebody who controls the filing of this document we talked about that goes to the Secretary of State. So let's say it's your attorney, and your attorney filed your LLC documents for you. Okay, you're going to list them as a company applicant.
Mm-hmm.
It's more than two. So you list this guy. And how often do our clients talk to their attorneys? We recommend at least once a year. Get your minutes, get all your documentation done. Do that. Do they do that? Yeah, in our fantasies, they do. So the bottom line is this, let's call him a guy. He dies in 3 months. Somebody's got to file an amended, revised BOI report within 30 days of death.
Wow.
And this happens in this town a lot. He decides he doesn't like where his office is. So he shuts it down and moves across town in 2 months. First of all, you got you, who's you? My company, who listed him as a company applicant because he filed my docs for me. I got it, number one, I got to know that he moved and changed his address. Number two, I got to report that on FinCEN's website as a revised BOI report within 30 days. Now, how on earth am I going to know that he moved, that he changed his favorite toothpaste, or that he, I don't
Right,
know.
right. This is crazy, right? I think people are probably getting the idea that the level of communication and synergy between parties that normally are separate beyond their few times a year where they check in or the one time. Now it's you've got to, as it stands now, you've got to stay pretty engaged to stay compliant as things are.
My biggest piece of advice for the practitioners listening. The biggest help you can be to your client is once they've done the report, however much you help them, that's up to you and your malpractice carry and all that. Once they've done this, I recommend that you help your clients develop. I'm going to do this sooner or later, probably sooner. They need to develop a monthly checklist. And it should go on their Outlook calendar every month on the 15th or the 25th or the 30th. I don't care. Every month, an alarm is going off, an Outlook calendar task is coming up, something's beeping and telling them, get your checklist out and go through it. And what that checklist is going to do, it's going to go through all the things that is on the initial report that you filed. And you're going to check off that you looked at and confirmed that the data on there, that company applicant, their name, their address, it's all the same, nothing has changed. You're going to confirm that, and then you're going to file that somewhere, because FinCEN doesn't require this. You're going to file this somewhere in a file in your office to document and prove, if you ever had to later, that you knew no 30-day period ever went by where you didn't check to make sure that the information hadn't changed.
Right.
For instance, you got a board of directors and you've listed them as beneficial owners. Talk about that in a second. But you listed them as beneficial owners. Two of them live in Florida. Why? Maybe they lived in your state when you first signed them up and they moved to Florida. Hopefully you reported that within 30 days. And let's say you did. So they're now living in Florida. These are like consultants. I mean, they live in Florida. They get on the Zoom meeting for your board meetings. You don't even ever see them. What do you know? One of them dies.
Right.
Did you get alerted? Did you report that within 30 days? Do you see my point? We got to tell these clients, look, clients, so sorry. You've got to have a monthly checklist in writing that you look over every single month. Now, I'm still working through things like, so here's my monthly checklist. I'm going through it. Well, poop. I haven't heard from my attorney in 3 months. Did he
Right.
move? Did he die? I don't know. I got to call him. Probably have to be on the phone calling all these people that I've listed.
Do you think there's any chance, and I've got maybe two questions here, and let's do them quickly because they may not serve our clientele, but I'm just curious. Do you think there's any chance that these rules that seem pretty cumbersome change? I know you don't work for the governments that would decide, the agencies that would decide this, but just you're plugged in because this feels cumbersome. This feels like pretty ridiculous. But if it happens, okay, is there any chance this changes by the end of the year? And then the second question would be, is this how it's done in the other countries that have rolled out these databases?
That's the second one first. We have no idea. The
Gotcha.
first one, though, I think of it like this. Whenever we have a new tax law, and this is something I used to teach with Europe, you got to remember, it starts in the House Ways and Means Committee, goes over to the Senate Finance Committee, then they duke it out, and they have what's called a conference agreement.
Mm-hmm.
Then the tax law goes to the president to get signed. It gets signed. Now it's law. Now you start having people like us implementing it, dealing with it, going to seminars about it, and learning about, which always happens, what we call these unintended consequences.
Right.
These crayon eating morons who pass this law, what do they know about how to really implement it and how it's going to affect our clients? We
Right.
start actually sitting down with our clients and we start realizing, holy Toledo,
Right.
this particular rule here is going to kill everybody. They can't do that within 30 days. So in the tax world, what we do is we wait for and we hope for something called a technical correction bill.
Mm-hmm.
That's typically something where enough people whine and moan and call their Congress people, and eventually Congress goes, well, wow, we never realized that little paragraph right there is going to cremate half the population. Geez, that's not what we intended. Okay, look, hey, relax. We'll give us a few months. We'll put out a technical correction bill where we correct that little particular weird thing.
Gotcha.
Now, what I'm seeing here so far with FinCEN and the BOI stuff is I forget how many this is now, but they've put out a few FAQs. They just revised them, and that's the document I was just talking about.
Right.
It seems like what they're going to be doing is putting out and or revising existing facts. So you can go on, I believe, to the FinCEN website and sign up to be notified, email notifications, which I get from FinCEN whenever there's a change or an addition. You definitely want to do that so you're able to keep up with the fact I'm talking about and this small entity compliance guide. They have answered some questions I've had for a long time. What if you form an entity, okay, in this year, and you file your report because you're a reporting entity and you're not exempt? Fine. You file your initial report, and then a year from now, you terminate the business. That's a change. Or you just, excuse me, you have a dissolution.
Yeah.
Maybe it's even an involuntary dissolution, like an 1120S termination.
Mm.
Well, these new guides here make it clear there's no reporting requirement, meaning it's not a change that you have to report within 30 days if your company terminates or gets dissolved.
Hmm.
What if you get bought out? I don't know.
Not sure yet. Right.
I'm an
Yeah.
S corp and I filed my BOI report because I am a reporting entity and I'm not exempt. So I filed my report, and 2 years later, two of my staff buy me out and they buy my stock. Well, have we had a change? Well, yeah, I was a beneficial owner. I'm out of the picture. I got two new beneficial owners because they're now the owners, 50% each. Well, I suspect, but the company hasn't changed. I'm thinking that's, and by the way, right now at this point in time, with the questions that I have, I'm telling people I have a mantra, which I'm repeating often because there are still too many unknowns, which I hope will be addressed, if not
Mm-hmm.
by the end of the year, maybe the next year. But my mantra is when in doubt, fill it out. What's the harm? You say, and many people are saying you should, if you got a spouse, you should list your spouse as a beneficial owner. What if she's not a real owner and has no control over the business? But she must have some say over stuff. You want to get a $500 penalty for not listing her? It takes you 12.9 seconds to list her. Shut up and list her already.
That brings up a question for me, Mike. I know this is still out there and you can speak to it and add some clarity, but maybe this is an area where there needs to be more clarity too. Fill in the gaps. Are people that are practitioners needing to add themselves as beneficial owners to their clients' reporting?
Don't forget, let's say we're helping our client.
Right.
And I think the answer is absolutely not. But let's just pretend, because we're not filling out the form. Remember, the client's going to go onto the FinCEN website, hopefully armed with good information that we've maybe helped them put together. And now they know who the beneficial owners are, who the company applicants are, how to put it in there. Okay. And they stop and they look at the beneficial owner thing and they go, no, wait a minute. One of the rules of a beneficial owner is somebody who exercises substantial control. You know what? I meet with my CPA once a month.
Mm-hmm.
And over all my business decisions. Should I get loans? What kind of interest rate? How should I pay my employees? Payroll reports. My CPA exercises substantial control. He doesn't have any legal control, but man, I listen to him or her, and I'm not sure if they're a beneficial owner. They might be. And I like the mantra, when in doubt, fill it out. So, hey, Mr. Mike Gordon, I'm putting you down. And the only way I'll ever know about it is when they call me on the phone, let me know they're doing it. And really, why are they calling me on the phone? Because one of the pieces of information that they need to upload to FinCEN's website is an actual image,
Right.
what they call proof of identity, passport, driver's license, and it can't be expired. So they got to call me and say, hey, Mike, could you maybe scan a picture of your driver's license and email that to me? What am I going to say? I'm not sure I agree with. Well, they're going to go, well, I don't care what you agree with. You're not the one facing a $500 fine. I'm
Right.
putting you down. And
Right.
if you fail to comply with what you need to give me to file this thing, I'm going to note that on the form, a little box to check. And now you could be willfully failing to comply with FinCEN. And FinCEN says that in those guides.
Yeah.
So the CPA could be responsible for a $500 a day penalty. And so they're going to say to me, Mike, like it or not, I'm listing you, buddy. I don't want all my personal information out there in this multi-million
No.
name base. And here's another big issue. Practitioners, be thinking about this. I'll put it this way. Good boy. The reputation that our government has in the arena of data protection, I'll just say, is less than stellar.
Yeah.
How's
Oh,
that for putting it succinctly, okay?
yep.
And you want your name and driver's license or passport, social security number out there in that thing, and they're saying, no worries, we're going to protect it. Come on, you can trust us. Oh man,
Yeah.
I can just see some little kid in a garage in Korea in his underwear hacking and saying, hey, what's this new BOI stuff? Wow, they got millions of names. Let's hack this sucker. I'm concerned as to who's going to be providing the protection. But anyway,
Right.
you know, this is something I normally say at the end. Let's do it now because this is a big deal. FinCEN thought about this very issue. What if there's people out there who don't want all their personal information all over the place? So you're an attorney, and one of the things you specialize in is setting up new entities. And in 2024, no, sorry, prior to 2024, you've set up hundreds of new entities, and they're still around. The good news is, prior to 2024, you do not have to list any applicants, company applicants, on your initial report. Only those who are formed in 2024 and later. But let's
Mm.
say, again, you're this attorney. You've been doing this for 10 years. You got a reputation. People come to you to get your advice. What kind of entity should I be? Would you do it for me? It's too much hassle. I'm busy doing what I do to make a living. And so this attorney is going to set up all kinds of people. Now he's sitting there going, oh, man, if I do what I've done for the last 10 years and I set up 100 businesses this year, my name and personal information, which has to be reported,
Yeah.
is going to be in that database all over the place. And
Right.
FinCEN said, okay, we get it. Some of you guys are weird. You're all worried about security. And what's the matter with you people? Good grief. We're here to protect you. Yeah. So they said, here's what we'll do. We will let you, the attorney, or you, the CPA, you go onto the FinCEN website, go into where the report is, fill out a report on your business. So for me, right now,
Mm.
I'm just a sole proprietorship, but I'm a single member LLC. So I gotta file it because I'm not exempt. I go in and fill the report, file a report for my company.
Mm-hmm.
I can request in that filing that FinCEN recognize me as what's called a FinCEN identifier. That's the buzzword, a FinCEN identifier. And I can request FinCEN to book me into their system, into that database, and then give me, I believe it's a 6-digit numerical code.
Mm.
Let's say give me 1, 2, 3, 4, 5, 6. Then they get back to me and they say, Mr. Gordon, we recognize you and have accepted you as a FinCEN identifier. Your code is 1, 2, 3, 4, 5, 6. You may give this out freely to anybody filing a report who wants to claim you either as a company applicant or a beneficial owner. So
Gotcha.
in that case, on their report, they don't have to list your address, your social security number, picture of your passport. All they have to do is say, Michael Gordon is a beneficial owner or a company applicant. His FinCEN identifier is 1, 2, 3, 4, 5, 6. That's
Wow.
all we need because we'll already have his information in our system. So
Wow.
now I'm only in their database once.
Yeah.
I'm not sure how much better protection that is, but that's their goal. Their goal
Wow.
is to help the practitioners and the attorneys not have to give that information out 5 times, 10 times, 100 times. I'm recommending, and I'm going to do it, that every professional, primarily attorneys and CPAs, enrolled agents, in Oregon, we have specialized licensed tax consultants. Other states have certifications. Any tax professional and any legal professional, I'm recommending get out there. I'm going to do it in the next few weeks. Get your FinCEN identifier number.
Yeah.
So when these people call you and say, hey, I'm going to list you, and you agree with it or you don't agree with it, all you got to give them is 1, 2, 3, 4, 5, 6.
Yeah.
And then thanks, goodbye, love and kisses, see you later. That's it. It's nice.
Mm.
It's really nice. These are, the beneficial owner, and let me just get over here to what do
Yeah.
I
Go
know?
ahead.
A beneficial owner, there you go. There's only 2 types. One is you exercise this buzzword, substantial control. The other is you own at least 25% of the company. Okay.
Right.
These 2 guides I talked about, these 2 documents you can print out, which I recommend, go into great detail on what is substantial control.
Mm.
And bottom line is any senior officer, it can be the entire board of directors, it can be your spouse, it can be a manager in the company.
Right.
It's pretty broad and pretty nebulous.
Mm.
And this 25% ownership sounds on the surface very simple. I own 25% or more. Well, minor children are an exclusion from having to be listed if they own 20% or more because they're minor kids. But then you have to be listed as the parent, showing
Mm.
their ownership. Or if you don't do that, you got to list the minor kid. And they envision some people getting creative. So for instance, I own 40% of my company. I'm a beneficial owner. But I give away 20% to my kids, and I only own 20%. I may not be a substantial owner. Now, I probably am because I think I still have substantial control.
Right.
And it's or, it's not an and. It's
Right.
not you exercise substantial control and you own 25% or more. It's
Right.
either one. So you may have nothing to do with the company. You may just be a silent investor and you own 25%. You have no idea what's even going on in the company. You're a substantial owner.
Yeah.
And there's 4 examples in this document, the small entity compliance document, where they go through ownership calculations. When you got a parent company and then a bunch of subsidiaries or a bunch of other related companies owned in different percentages by different people who some are managers, some aren't, it gets a little bit complex. I would recommend to anybody to read those 4 examples. They're very good. Took me about a half hour to get through them. I had to do some drawing on paper and kind of refresh my mind and just, check their math. But it's fairly simple. I'll tell you where I'm a little bit confused right now because I'm not seeing anywhere the word attribution. We know in
Mm.
tax law, the attribution rules are complex and onerous. And
Mm.
here, I'm not seeing any mention of attribution rules. So what if I own 15% of the company and my wife owns 20%?
Mm.
Neither one of us own more than 25%. And let's say she exercises no substantial control. I do. She wouldn't be listed. She's not a substantial owner and she doesn't own more than 25%. But if attribution rules are going to be brought in like they are with the IRS, then is her ownership attributed to me or vice versa?
Right.
The answer is, heck if I know.
I'm not
And
sure yet.
hopefully that cleared up.
Right.
Again, I don't want to get a $500 penalty. I don't want a client coming in saying, you didn't tell me to list her and now I'm getting assessed $500 a day. Again, as practitioners, we want to be concerned with this because we don't want to be putting ourselves in a position where if a penalty is assessed, you don't want the client coming in saying, hey, you're the one that told me to do that and you were wrong.
Right. Which is
Let that,
back to something you said earlier, just that I wanted to clarify. You would not recommend people fill this out for their clients. You would not recommend that they charge a fee. You would not recommend that you touch this if you can avoid it.
I'm not gonna. I have
Yeah.
no problem charging an hourly fee if all I'm doing is reading the rules with them. Maybe I'm printing these two things out and saying, look at on page 28, it talks about beneficial owners. Here's what it says. And there's a checklist that they can fill out to determine if someone's a beneficial owner. I'll just
Yeah.
say, take this checklist back to your company, sit
Right.
down with your managers or your other board, whatever, and go through this. I'll charge a fee for that, but I'll
Sure.
tell you what I'm concerned about. And I'm hoping Cameco and maybe the other malpractice carriers will come out with, and Cameco usually does, they're pretty good about this, we'll see, a template for a engagement letter
Mm-hmm.
where we get our rear ends off the line, where we can
Right.
essentially say, here's what I will do to help you. Here is specifically what I will not do. I will not fill out the form for you. I will not file the form even after you fill it out. Because if
Right.
I'm a direct filer, I got to be listed as a company applicant, and I don't want that.
Right.
So
Right.
I think there should be an engagement letter. And when you start getting at all that stuff, I got some friends telling me, Mike, I'm going to just, matter of fact, there's a firm in town that just put out a letter to all their clients. Hey, you get your head out of the sand. You better pay attention to this. Oh, and by the way, we ain't going to help you for more than 1.8 seconds. We want nothing to do with this crap. That's what they said in the letter. They're just
Wow.
saying, touching this with a 10-foot pole. Good luck. Love and kisses. Call somebody who cares.
And there's no, and just to be clear, let's pretend that accounting group, that practitioner in town for you, for some of their clients may qualify as a substantial owner, right? Okay, equity aside, they could qualify. Is there risk? The risk and the fine is only to the business. Is there risk to the practitioner if he's like, hey, I don't want to touch this, but he really or she really is a substantial owner? Is that like the liability they need to think through at all?
The reporting entity.
Yeah,
So if the practitioner tells all his clients, I got nothing to do with this, and they put him on as him or her as a beneficial owner, that's up to them.
got it.
Now,
Got it.
however, liability can transfer. So
Right.
let's say I get my FinCEN identifier, and there's a change in my address,
Mm-hmm.
in my status.
Right.
I have to alert FinCEN within 30 days because the reporting entity, all they got from me was 1, 2, 3, 4, 5, 6. They
Right.
have no idea. I changed my driver's license from Oregon to Washington to Nevada. They don't know that I've changed something. Well, FinCEN needs to know. I am now the one responsible, and this is one of the reasons why I recommend uh, being a FinCEN identifier, because I'll know when I change something. I don't need to get out a monthly checklist and call me. I know
Right.
if something's changed. But the reporting entity, Bob over at the laundromat, who owns a laundromat, may not,
Got it.
unless they do that monthly checklist. The effort to monitor this on an ongoing, at least every 30 days, don't let 31 days go by without doing something.
Good Lord.
It's just not worth it. It's
Yeah.
going to be Herculean. We're talking a massive effort here. And that's why I said, I believe this with all my heart. The first 2 years, which would be 24 and 25, I
Mhm.
genuinely believe, and I bet you we'll see some stats on this, the non-compliance level is going to be big.
Yeah, for sure.
The only question is, okay, what's FinCEN going to do about it? Are they going to say, okay, we'll give you some leniency. Let's not kill the goose here. Or are they going to be like, we're cooking that sucker. We're coming and we're going to make sure everyone in town realizes you don't play with us. This is serious stuff. We're after the money launderers, those who fund terrorist activities, the Russian oligarchs.
Right.
One thing that FinCEN, they came out with, they didn't make a ruling about it, but they were discussing it. One of the other areas where these bad actors, we'll call them, operate to obfuscate ownership and get away with money transactions is in real estate. And they came out and said, we're going to make the realtors in America report to FinCEN anytime there is a sale of real estate.
Oh, no.
And the sale is all cash and the selling price is $300,000 or more.
Wow.
Then the realtors went nuts.
Yeah, no doubt.
Are you out of your mind?
Yeah.
Do that to us? So they came out and said, okay, Kai, you're right. Shame on us. We'll make the title companies do it. That's what they said. Now, I've not seen anything after that. I've not read anything, and I've been looking. They obviously have not made that law yet. And they're so concerned about real estate transactions. Somebody in FinCEN said, if you look nationally, these real estate deals that cover up everything, and you're right, anything over 300 grand or under 300 grand, we want those reported. Over 300 grand, that's too big. That's not where the big cartels and oligarchs and mafia work. They're in the small stuff, easy to hide, easy to run away from. So they said, and I have no idea why, in Washington, D.C. only, we will take that $300,000 threshold and put it down to 30. So anybody who buys real estate in Washington, D.C. that's over 30 grand and they pay cash, you got to report that to FinCEN. Again, this has never been made a rule. This has never been done, but it was talked about. I'm dying to see, where's this going to go?
Right.
Where is it right now? It's buried somewhere. Someone's talking about it. No one's coming up and dealing with it.
Wow.
Talking on, well, the title companies are going to have a conniption fit if this gets laid at their steps. It's going to be
you can appreciate the intent of trying to root out corruption that is most certainly a large part of our experience, and that there's a lot of bad actors that need to be rooted out, and maybe give them some grace that they are throwing a shotgun approach at everything to try and catch as much as they can. But I'm with you. I'm quite curious if this really hits November of this year or February of next year and fines start rolling out, a letter, confusion. And that's why Mike, I think we need to do a follow-up on this in 3 to 4 months and just get an update from you. But I do think that for practitioners, which is our main focus today, pay attention to this early and often, and do your best to, yes, when in doubt, fill it out, get it done. I think that's wise to be that identifier as well. That's a big takeaway from today, and how to position yourself with your clientele. But this is a cluster, and it's not going to probably be anything different than a cluster for a while. And so this is
something. Again, I always think in terms of practitioners covering their rear end.
Right.
I'm sure some practitioners will go, Mike, that's just overkill. But it may pay off in the long run if practitioners, I'm just trying to think how we would do it in my practice. Would it be such a pain in the rear that we wouldn't do it? I'll reserve judgment. I'll just put it out there. And
yeah.
We might want to, whether it's via email or an actual letter, the first of each month, put a letter out to each client, reminding them, don't let that 30-day period pass. Because then we've covered our rears. We've alerted all our clients.
Right.
And the good thing about that is, one of the things Nate and Chauncey and Bill Glazer and Dan Kennedy always said was, use any opportunity you can to touch your clients.
Yes.
Even if it's even a letter that is demanding collection, because this client hasn't paid you for 6 months. They said, even in a letter where you're demanding payment, do something with marketing.
Yes, always.
Send a letter out to your client. Hey, I want to remind you, this BOI thing's out there, a little paragraph about what it is. Call me if you have any questions. Oh, and don't forget, if you need the tax and estate work or a marketing effort. It's a perfect opportunity to touch your clients for an extraordinarily inexpensive way to do it. And it covers your rear end on this BOI stuff.
And there are ways, if you have a well-developed CRM with proper tagging, there are ways to send all active clients reminders, right? This basic stuff. That's stuff that like within TaxProMarketer's system can be built out. So maybe, Mike, we don't have that yet, but maybe honestly, by the end of the year, I'll be able to get on with you and talk through this again, but give examples of how that could work if you were a client of TaxProMarketer's, that it is an active list that has an automated email that you don't have to think about just to
Exactly.
cover your bases. That's actually not hard, but the emphasis on with everything you do here, you want to be compliant and you want to play by the rules and you want to take care of your clients, but be relational. And that is Nate speaking. That's Chauncey speaking. Try and find a relational way. And we will be producing content throughout the year. We do weekly emails, kind of something Nate pioneered a long time ago. We still do, still write weekly emails, a couple of different tracks, and we will be putting this out for our clients to send out to their clients throughout the whole year. But again, maybe there's even a step further of a set it and forget it standard static email that's just, hey, just a monthly check-in. Just wanted to make sure you're on top of this. I think that there's some wisdom there. I'll bring that back to my team, Mike. I think that might be a great development that we'll have to do a follow-up call on later this year so we can talk about it.
You know, your client is at a restaurant having dinner, sees a buddy who uses a different tax person, and your client's going, hey man, oh, I'm so glad I'm using Mike or Nate or Christian or why. Well, look what I just got. Oh, I can't believe I almost missed this. Turns out I called my attorney. He moved. I'm like 2 days away from having to file this. I never even knew anything about it. And the guy at the table goes, what's that?
What is that?
My
Yeah,
tax
exactly.
person is telling, I've never even heard about this thing. I'm
Yeah.
not getting monthly notifications. I'm
Theo,
not getting
what?
anything.
Yeah,
Good PR.
I love it. I
There's a
love it.
compliance aspect, but that's not, we also got to be in compliance. But I think even more than that, use that as an excuse to touch your clients.
Absolutely.
Don't just get a bullhorn and start shouting out tax law or compliance issues. No, be a marketer.
Exactly. Exactly. And that's a great segue to the off ramp here of it's hard to do. And that's where marketing agencies blending expertise with relationship
Mm.
can be really effective. It can be really effective to blend the complicated things that we're talking about and all the things we didn't touch today, Mike. There's a lot of things we didn't poke out with this, but you hit on some of the main points. And there is a way to blend this together that helps your clients. Don't use fear. Fear might be
Exactly.
a part of it, right? Like it is like you got to do this. So let's just be real. There's deadlines and there's things you got to hit. You should be motivated a bit by those deadlines. However, to try and be the trustworthy expert in your area with your clientele, with your lost clients. That's a great lost client, former client email to send. Hey, you haven't been around for a while. Mike here. I just wanted to make sure, as a courtesy to you, that you kind of had your head on straight with this BOI stuff. We're learning a lot about it. There's some new rules that started January 1st of this year. You got a year. And we just are going to provide either a free consultation on this front or whatever you want to do there, or a resource or a fact sheet. You break down the 38-page and 45-page document that Mike has highlighted from Vincent, and you develop your own asset around this collateral that you can send out. That just, again, and it'll update. You'll have to stay fresh with it. If we get any technical, what are they again? Corrections, right? But we've got to do something. And there is an opportunity, whether it was with the PPP stuff or any of the COVID craziness or any of the tax law changes that happened, like all of those opportunities, they were different opportunities, but they were opportunities to educate, to be kind, to be the authority and not be scrambling at the end with your hair on fire,
Right.
or to use sometimes tactics we see where there's just fear used to poke and prod people a certain direction. And that we don't like that in the long run. So I love that impulse from you, Mike. And again, I'm getting even more animated. And I think we need to do something on this. So I'll follow up with you, and guys, we'll follow up
You
too,
know,
and maybe do a
after I
podcast.
get these emails, I'll probably be reading at least once a week something new on their website,
Yeah.
news, maybe an updated fact, somebody finally addressing some of the issues we have, who does what, when, what kind of changes are required, what kind aren't.
Yeah.
All these things, there are exceptions and exclusions, and you can read about them all in those little documents. They're easy to follow, nothing difficult, but like everything, even in tax law, a lot of times we're a little bit fearful. There's a new law. We're thinking, oh, I don't want to read another new thing. I'm so tired. I already got enough codes and regs to read. And I always tell people, no, 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 relax. And remember, 90% of the people who wrote that tax law have no clue what they're doing. And
Right.
you do. So if they can
Right.
write it, you can read it, and you can understand it, just go slow,
Yeah.
but force yourself to do it.
Yeah.
And I would say with those two documents I mentioned, force yourself to go through it. Do what I did. Take a yellow highlighter, a red pen, and a black pen, keep right there, and just go through and read them.
Yeah.
It's not rocket science. There's nothing in it that's rocket science. It pretty much makes sense. Some of them you got to just stop and read it a second time and go, what were they thinking here? Somebody must have complained about something. Who complained here? Why are they making that rule? And it
Right.
becomes obvious.
Right. Right.
Anyway, I wish all the practitioners on the line a wonderful journey through this stuff. We'll be seeing a lot of people complaining, a lot of people jumping on board, a lot of people freaked out. Fine. We'll be
Yeah.
the experts. We'll be the ones calmly sitting there going, no, 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 don't jump off the boat. The boat's not sinking. It's okay. We're good. We can handle the storm.
You're
Well,
already in this seat, Mike, but you might have a busy travel schedule as this year goes on to go teach and present. I think you're already there, but I bet your year will be eventful as people.
the subject I taught the most for Gear Up was passive activities.
Mm,
I am teaching already 3 two-day seminars coming up in the fall all over the state. We're calling it a deep dive into passive activities. It's a 2-day course.
mm.
I have yet to prepare for it. It's going to be monstrous, to say the least. But it's
Yeah.
fun. I love this stuff. I think it's interesting and
Mm,
fun to present it.
yeah.
Anyway,
Thank you again, Mike. This was a great
thank you.
conversation. I think it added a ton of value. And if you're up for it, I know you might have some other things and events going on pulling on you, but we'll bring you back on and hopefully use this platform to get this message out to as many practitioners as we can and do an update in a few months. And so we'll follow up with you. But guys, everyone who joined and has been on with us this whole time, email us and then we'll put in the show notes the links that Michael referenced in addition to his slides that he's put together.
For legal purposes, I should say PowerPoint slides
Yes.
or PDF version of those PowerPoint slides. I believe you have both. You feel free to knock yourself out, use it any way you want. You can even go so far, if you're a PowerPoint user, you can go into the master slides, take my name off of everything, put your name in there, so you can be the one that looks cool, and you
Yeah.
made up the whole PowerPoint slide. Like I said, I really don't care. I have no pride of authorship. I'm retired.
Right. I love it. Thank
Just
you
where
for that
people can
kindness.
help, and I want to see practitioners doing good stuff and doing the right stuff and enjoying it. So anybody can use it any way they want.
Lovely. Again, everyone, thank you for joining. Michael, thank you again. And we'll do a follow-up here in a
Okay.
few months. But yeah, we'll leave it there and
Good.
we'll touch backs with everyone here shortly in our next episode of this podcast. So thank you again, Michael.
Good. Take care, you guys.
All
Bye-bye.
right. See ya.